Hello guys and welcome to another post-market analysis of Bank Nifty. Today is November 22nd and here we have the Bank Nifty's chart of in a 5-minute time frame. This was a beautiful day because this moment is well awaited from the last couple of days. So as usual, let's start from our daily chart. So here we have the daily chart of Bank Nifty, and from the last couple of days we have been talking about this trend, this rising trend line. This is a tentative trend line that we have drawn from October 26 and 7. It gave us a chance to draw this trend line, and this support area, that's this green zone, was intact. It was playing a major role in our Bank Nifty chart from last few months and weeks. So, but last Friday is when we have seen a breakout from this a trend line. So what has happened is we already said on this particular day that if you see a confirmation candle after this, after that we can see a Bank Nifty going towards the downside, and if you see any close above this level, then that can be taken as a trend change, and again we can look towards the upside for the Bank Nifty. But in this case, we have received a confirmation, but it is not very stronger confirmation because this candle is a doji candle. So this was a moderate confirmation, but still Bank Nifty, we are looking Bank Nifty towards the downside with a little pullback expected. We don't know where that pullback can happen. So that is what is happened yesterday. We have seen a gap up opening, but still we have seen a bearish candle, and that was the case even today. But we have not seen a gap up opening. Instead, we have seen a little gap down opening, and from there market was very bullish and seen a new lows in from the last 1 week or so. So if you notice, this is the Bank Nifty's chart on a daily time frame where we have this as a support zone, right? So we are not very confident to trade. We recommend not to take any trades in between this area. Either you take a trade at this bottom boundary line or towards the top boundary line, but in either but in between these two lines, it is not very recommended to take a trade until you have an intraday support and resistance level. So that's on a daily time frame. Also, we'll take this line off now. So in our last 3 days, we have continuously been discussing about the downside momentum, and that is what has happened finally today. Let's now go back to a 5 minutes chart and see what we can learn from today's price action on a Bank Nifty. Yeah. So this is the 5 minutes chart of Bank Nifty, and this green zone is what the zone that we have got from our uh, daily chart. So yeah, to start with, Bank Nifty have started at 43,680 levels, and immediately on a 5 minute time frame, we have seen a continuous red candles. We have seen a continuous bearish momentum towards the downside, after which we have seen a pullback towards this lower part of this support line. But this is the place where we can take consider this as a swing low, because prices have hold above this line for more than half an hour, in this case from 9:30 to 10:20. So that is 10 minutes less than an hour. So we have taken this as our swing low. So what is our next thing to do on any price chart is to mark our swing high. So here we can say that this is a swing high, but before that we have this entire green zone, right? So this bottom line of this green zone will become a very 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 important location for our prices when it is seeing a pullback towards that area. But before that, this is the place from where Bank Nifty has seen rejection. So from the time market has opened, Bank Nifty couldn't cross that area, so that becomes your swing high and also your resistance area, and this swing low becomes your support area. In this case, now we have both support and resistance areas, and also we have a very important line in between, which is a bottom line of your support area coming from your daily chart. So what has happened here is, so now by now many of you may know what a bearish engulfing pattern is. So here we have seen a bearish engulfing pattern from 950 and 955 candles. So those who are not aware of what a bearish engulfing pattern is, we have a very clear and detailed explanation on bearish and bullish engulfing patterns and when to use them, and what makes these patterns very important and significant, so that you can use them for your advantage in your daily trading. So there we have our first signal, that is a bearish engulfing pattern And also we have a second confirmation, that is that we have that pattern coming at a very important location. And now the third point that you want to check is your risk versus reward ratio. So you would have entered there into this candle, and your next immediate reaction towards the left side is that, so your target would have been this, and your stop loss would have been above this line, above that line. Okay, so let me zoom in. Here is where many of you will definitely make mistakes. So I'll take this now to explain you, to avoid a visual confusion, and I'll draw one more line there. So this line, okay, I'm taking this line off. So this blue line, what you're seeing is the highest point of bearish engulfing pattern. When we say that your stop loss is above that, usually according to candlestick patterns, you should see a close above this area, not just a whipsaw. That is what has happened here. So many of you would have trapped right there, because you have seen the prices going above this area. Many of you would have thought that your stop loss was hit, but that was not the case. According to the standard textbook rules of Japanese candlesticks, we should see a close above this area. So in this case, we have not seen a close above this area. So many of you who were there towards the put side would have seen stop loss. But remember this rule. This is a standard textbook rule according to many centuries old books written. It's okay. So you should always see a close above this line. So this didn't happen. So that means that your stop loss was not triggered yet. So from there, your first target was this line, and your when your first target is hit, what we usually say is get your stop loss from cost to cost, and then keep trailing. So here in this case, this was your next target, even that can, even though that was hit. So after that, if you want to see another targets, you should simply look on the left. So if you look on the left, here we have seen a couple of reactions that is there. So yes, prices have even reached that stage, and after this stage, let's see if we can trail our stop loss further. Yes, the next target was that, based on the previous couple of days back reactions. So now in this case, prices have seen only till here. Okay, this level was not reached, but then again from there we have seen a pullback. That means that your stop loss would have been there. Okay, if you're keeping that as your target, if you're trailing your stop loss would have been there, right? So in this case, you have you would have made a profit of, let's start from there. And this is also a chance. So whenever you see a chance, whenever you think that your stop loss is high, whenever prices pull back towards the upside, then you can also get the advantage of this price movement, because if you are entering there, your stop loss is very minute, and your risk versus reward ratio is going to pay off many times better than that. So in this case, if you have entered there, okay, your target was that, which is 87 points. 87 points, I'll just write it there. Okay, so 87 points of movement on a bank nifty is definitely a very good um, uh, moment. Okay, so after this, let's see what has happened. So it has broken down this support area. It has broken down this support area, and but here you should not look to enter into a trade. Why? Because even though it has shown a confirmation candle, because you are already in the trade, you should have entered there with your engulfing patterns completion, and then this is not the place to enter. But those who have missed this, if you want to enter there, you should immediately look on the left, where is your reward. So your reward is immediately there. So if you want to enter into this candle with our breakout rules, so you have got very less reward, and your risk would have been there, and your risk versus reward ratio is not playing a very good role. So now we are done with that, and let's see what has happened after that. See, after, because of the risk versus reward ratio, we have not shown interest on any trade, and also you would have been in that trade from this 955 candle, so that was not taken. And here also you have seen a breakout towards the upside, but after that you have not seen any confirmation candle after that. So for those who are following us from the starting, will know the rules of the breakouts and all. And also we are planning to bring up a special video on the breakout, how to identify a proper breakout and a false breakout. So if you want to see that, please let us know in the comment section. We'll do a video on that. We'll be very happy to do a video on that. So here you have seen a failed breakout towards the upside, and then whenever you see a failed breakout, and then whenever you see and a below this, you can immediately take the trade, considering that, I mean, seeing you with your i- if your risk versus reward ratio is playing a good role there. So in this case, if you want to enter here, and your stop loss should be above that candle, and your reward on the left is that, in this case, it is not showing any proper uh, risk versus reward ratio, so we'll take that off. See, all you have to do in the stock markets is not trade continuously, rigorously, every minute, every candle. No, that please don't get uh, attracted towards the scalping until you become a master in trading for at least 2 to 3 years. Okay, so now here is another indication where we have seen. See, this particular 9 11 20 candle is a hammer. We have also a very clear and detailed video done on hammer, so please do check out in our candlestick pattern series. In fact, that was the first hammer. Oh, sorry, this is a shooting star. Okay, so we have a shooting star as our last video in our candlestick pattern series as of now. So this is a shooting star candle we have seen, and then this becomes a reason to enter. And also we have couple of other reasons, that is prices getting continuously rejected from this area, and also you have seen a rejection, a failed breakout towards the upside. So the only thing that is worrying us is the risk versus reward ratio now. So even if you are entering there, your risk would have been this, and your risk would have been above that, and your reward would have been this. So not a great scenario. So it's always safe to, but after seeing a trend like this, after seeing a momentum like this in the bank nifty, it is also wise not to lose the opportunity. So we would have waited, and then until you get another bearish engulfing pattern right there. Okay, so now this is giving us some sort of confidence, because you have continuously seen. First reason, you have seen a failed breakout. Second reason is you have seen a close below this, and after that we have not seen a single candle getting closed above this resistance area. And now we have a shooting star there, and also now we have a bearish engulfing pattern there. So now it looks like, with the continuous opportunities like this. Okay, if you want further confirmation, you can also activate your volume and then check how the volume is going. Yeah, so here if you notice, this is your volume for this green bar, right? And notice, the immediate next bar has a lower volume compared to that, but the bar next to this has surpassed your green bar's volume. So this is also adding confidence with the kind of confirmation that we are getting from the volume. So because we are getting multiple confirmations here, multiple indications here, the market is going down. And also, according to the wedge analysis, if you draw a moment, see, this is a momentum towards the down. Whenever you see a momentum like that, and whenever you see a formation like this, you see that is a rising trend line with this wicks, and also you have seen a breakout, so that also becomes another indication. But there is no need to search for many more confirmations, because you have already seen more than 1 2 3 4 reasons for this entry. And also your resistance area itself is going to be another reason. So you have this many confirmations right there. So this is where you should have taken your trade, and then kept your target there. That is your first target. And then prices have reached, you have entered into this candle, 11:35 candle closer, and your prices was reaching your target within no time, within 5 minutes. And after that, you would have got your stop loss from cost to cost. And again, from there, if you look at it, if you from the left, here we have seen the next target, that is where the reactions are, and after that this becomes your final target. So in this case, it has reached all these targets. Also, if you want to further trail, then keep looking on the left you have really nothing. But if you want to really look into the exact reaction, we have something from November 7. Let us see now whether prices today have reached number 7. Yes, it has also reached number 7, but it all depends on you, like how patient you are, how interested you are in trialing your targets, and also getting your stop loss on the bar. All right, so in this case it has reached this, well, this is too much of a target, so let's not aim anything more than that. So but those who are greedy can are always welcome, you would have traded that as well. But this is 162 points of movement there, so I'm writing 162. So that is how you should be doing. And after that, really at 12:20, I'll just take all these lines off to avoid the visual confusion on the chart again. So now, because we have seen a target reached in this candle, somewhere here in this zone. Okay, so here this is the place where again we have seen a reaction, because at this point was holding for more than half an hour. Okay, see, from 12:25 to 1 o'clock prices are holding this line, and this is a very 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 important formation. If you see, this is a hammer. Look at it, this single hammer has decided this much of the momentum. Okay, so that is the advantage of having technical analysis. But this hammer should come at any important levels. But in this case, we don't have any remarkable important levels from the last couple of days. So that's why I couldn't draw any a proper resistance, sorry, support line. But this hammer itself is giving us a reason to draw a support line. So I request you to watch what a hammer and hanging man's are. We have very clear detailed analysis done on that with a proper back testing. So that gives us a reason to draw the support area. Here at 1 o'clock, we have seen prices again coming into the support area and given us a proper bullish engulfing pattern. But again, you can't take a trade there because of risk versus reward ratio. If you want to enter there, excuse me, with this, okay, so if you want to enter into call option there, your stop loss would have been under this is a very huge stop loss. Okay, so that was not a very ideal location to enter into a trade. But then after that, if you really look to get into a trade, let's check. Yes, here you see, this also is a kind of swing high, which is giving us a chance again to draw a resistance line. Okay, so here you have seen a bearish engulfing pattern at 110 and 115 candle, which means you're also seeing a good risk versus reward ratio, because your reward is this and your risk is just above that. So now in this case, you would have taken a trade because it is a bearish engulfing pattern. It is coming at the intraday resistance area, and it is also having a clear path towards the downside. So now this trade would have been taken, and it was a genuine stop loss, but that's absolutely fine, because you have seen a close above this right there. Okay, and your target was this. Your target was at this is a proper 1:1 risk reward ratio, but we have seen a loss of 38 points, which is absolutely fine. You cannot avoid losses. Excuse me with that again. So you cannot avoid losses in the stock market, but it is okay to give to accept the losses every now and then. That is what a professional trader do, and if you want to become professional, that is what you should be doing as well. So here we have seen a 38 points of loss. So what I'll do is I'll mark it as a minus 38. So this 38 is the loss that we have seen now. And then again here you have seen a failed breakout and a close there. But from by the time market is there, your target is just this. So we don't have a proper risk versus reward ratio there. So you'll wait for another price action. So here is the place we have seen the breakout, and this is the confirmation candle. And again now the time by now is 2:25. So this, yes, it was a proper breakout. Here you can take the trade, but then look left on your chart where you have a target right there. So this is kind of a resistance zone. So we don't know whether we will be able to receive this much of reward towards the upside, because the stop loss is going to be here. So that is not giving us a proper risk versus reward ratio. So I think that's it for today, and I really don't recommend any of our viewers to take trade beyond 240 or 250. That's not the time where you look for the momentum to reach. Okay, so in this case today we have 162 points there. Let's calculate how much that's going to be. So 162 points here, and then 87 points there. That is 249 points, both these put together, minus we have seen a loss of 38 points. So with all that, we are at 211 points. So today you would have seen, excuse me, you'd have seen 211 points of movement in the bank nifty. You have, if you have traded according to this. So it's it's very simple. All you have to do is wait for the swing highs to form and swing lows to form, and then draw proper resistance and support areas, and wait for the proper candle confirmations, and also the proper breakouts, and also look for a failed breakout opportunity, so that you can take the trade in the opposite direction. So that's it for today. Hope you have learned something from today's analysis, and I know it's a long video compared to our last few days or weeks video, but still we cannot ignore or bypass some of the analysis, because we need you really need to look into every swing high and low. That is what we did today. So I hope we have learned something out of today's price action in this bank nifty's chart, and please do subscribe to our channel to see more such meaningful analysis. And this is the way to learn, is what we believe in this channel. And thank you so much for being patient for the complete video, and see you tomorrow in tomorrow's post market analysis video. Thank you.